Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Kevin Davitt, Head of Index Options Content at Nasdaq, as well as Justin Zacks, Vice President of Strategy at moomoo. And we're here to discuss moomoo's options trading contest in partnership with Nasdaq. We'll learn all about the winner, how the other traders were thinking, and the strategies that they were using. It is great to have the both of you back with us. Welcome to Trade Talks. And Justin, this is one of my favorite things to cover, is to learn how the mindset of the retail investor is navigating these markets. Tell us more about the contest overall.
Sure. So we ran the options paper trading contest from January 13th to February 7th. Everyone started with $200,000 in virtual money. They could use margin, they could short sell. We wanted to make the most realistic trading environment possible without them risking real money. It ran over 4 weeks, and each week we had different prizes. The weekly prizes totaled $15,000 in cash rewards. And for the top overall winners, we gave away a MacBook Pro, an iPhone 16 Pro, Apple Watch Series 10. And what we found also was we had a pool of $6,600 of cash rewards that if you returned higher than 5% for the entire contest, you would share in that pool. And so we had almost 17,000 people participate, and over 730 people got that part of that pool and were able to make at least 5%. The winner had a return of almost 1,700%. So it was really great to see how a lot of people used this contest for educational purposes.
Yeah, I can't wait to hear about the winner strategy. But Kevin, let's talk about this some more. What is the importance of these types of programs to help traders and foster their experience?
I think Justin did a really good job outlining why opportunities like this are important from a NASDAQ perspective. The ability to leverage the moomoo brand, particularly international, where we have seen significant growth over the past handful of years and sort of expect that to continue. But talking about an environment where you are exposed to the moves that are happening day to day, and you can learn from sort of strategic approaches, the discipline that's required to protect and grow capital during what has been an unusually uncertain environment. And so to hear the number of people that were able to hit that threshold and to think about the importance from the exchange standpoint and from moomoo's standpoint, the value of a well-educated end user is significantly greater than someone without that type of experience. And this can be a great bridge between the theoretical stuff that is widely available and then practically applying it in the market day after day.
Yeah, Kevin, I would agree with you because that keeps investors engaged with the market as well. Justin, I keep hearing 1,700%. Is that what you said? That's what I keep hearing in my head. Tell us about.
It's hard to even get your kind of head around what that means, but it's a significant return. The winner was very focused on short-term index trading, zero DTEs. And then some of the other winners also, used a lot of short-term calls and puts. They were really trying to take advantage of market volatility, and they were playing some earnings. So there was lots of different strategies that they employed. Some of them did kind of a long call strategy versus long puts for indexes as a hedge. So there was a lot of different strategies that worked for a variety of traders.
Justin, in the day-to-day data that you see, is zero DTs, is that a trend that you're seeing outside of the contest as well?
Yeah, it's popular, among retail, among institutional traders. I've seen statistics that, overall, index option volume for zero DTEs is somewhere along the lines of 40 or 50%. People really like the leverage that is available there, the flexibility, the idea that you do not have to hold zero DTE overnight, so there's no overnight risk. Obviously, it can be very risky. And so, I always do caution people, but this is why the options paper trading contest is such a great thing. So I saw one user had some great, one of our users had some great comments they didn't understand how much leverage is in options. They're like, this really taught me something about, how many options I might want to buy. So they might not want to buy as many once they start to understand how the leverage works and how fast they can make money and how fast they can lose money. And this is a great tool to go and, get that real world understanding, as Kevin was talking about. We already have a lot of tutorials, and I do a lot of webinars. We have a lot of webinars on our website, in our app, teach you great theoretical knowledge, but this is the chance to get that great practical knowledge.
Yeah, it certainly is. I wish I could jump through the screen and high five that trader who made that comment, because the concept of leverage, until you experience it, that's one way to learn quickly in terms of how the market works. But Kevin, you have consistently come on the show each month, and you're always talking about the growth of index options and how they're being used with retail traders, advisors, institutions. Tell us more about the trajectory and what your outlook is with that.
So you're right that I do come on and generally talk about that angle from some perspective. Taking a little bit broader view, it seems like the market's focus has really shifted towards index products thus far in Q1. And I'm of the opinion that like the stories and the narratives in the market right now are kind of the big ones. As we've talked about, there's been a reemergence of what we call headline risk. And I think there's been a recalibration of exposure at the sector level, at the geographic level. And that's being reflected in the relative moves both domestically in the US and internationally. Now, concerns are much more focused on systematic risk as opposed to idiosyncratic risk. I think maybe just to give a little color around that, NVIDIA for the past 2 years is a perfect example of an idiosyncratic story. But when you think about tariffs, when you think about trade policies, labor markets, interest rates, or valuation concerns, like we were talking about before we went live, those issues typically play out at the index level. And as a result, the exposures and the risk management structures that have been expressed thus far this year have often been at the index level. From a visual perspective, we should have a look at how this is played out over a slightly longer time frame. But there's been a boom in index options since interest rates moved off the zero bound in like 2022. And that very much continues. The rate of change has picked up in Q1 of 2025. And I think it's most notable in NDX. When you compare average daily volume to early 2022, NDX volumes have effectively quadrupled. If you look at the broader OCC cleared index options, they've doubled. And that is nothing to snub. That is tremendous growth overall. It's an overall growth story. And from a corporate perspective, I think the relative importance of the Nasdaq 100 continues to grow. And I have a vested interest in that continuing.
Right. And Justin, I want to bring it back to the concept of volatility. Sometimes it has a negative connotation, and for good reason, but it does play an important role in the markets. Expand upon that for me.
Sure. The volatility becomes so important for these traders, particularly when you're using options. And it's really that the great part about the options paper trading contest was how you could get educated about how volatility works. And so what we've really found that everyone had a different way that they were using this contest. 16% of people in the contest were prior options users. 84% were not. So they got the firsthand knowledge of how volatility works without risking their own money, because options can be super complex, and it takes a while to learn about them and learn how they work. So doing a competition like this is great if you haven't already set foot in the options trading realm. And so we learned that a lot of these options traders were extremely savvy. They were building systematic approaches. They were using this to learn better discipline, to control their actions, really build a safe place to make mistakes, to learn patience with their trades, and really think about risk management around volatility.
Mm-hmm. And Kevin, to wrap up here, you have an interesting visual that shows how volatility is impacting at the index level.
I hope your audience finds it interesting. So when I think about the moves that we've observed this year, I would characterize them so far as relatively significant on a day-to-day level, but not highly unusual. So these visuals are through yesterday when we're talking about the top side. And the vol overall for 2025 looks a lot to me like the vol of 2018. I would describe that kind of episodic in nature, and it's not yet quite as elevated as we saw in 2022. Again, through nearly one quarter. So breaking down the visual a little bit better, you can see average daily close over close changes in both the Nasdaq 100, that's in light blue, and the S&Ps in dark blue. The average close over close moves work out to 1.1% in the Nasdaq 100 and 0.8% in the S&Ps. So it's demonstrably more vol in the NDX thus far. That is typical over longer time frames, and it's naturally played out if you look at the average daily high to low ranges too, significantly higher for the Nasdaq 100. My opinion is that many tactical traders gravitate toward the Nasdaq 100 because of the volatility, not in spite of it. Now, broader perspective, and that's the bottom part of the visual, it gives you a little longer term perspective of annualized vol measures. Again, this is through yesterday, and the Nasdaq 100 is pacing for roughly 22.5% volatility annualized, whereas the S&Ps are running around 16.25. That's higher than the past 2 years, lower than what we saw in 2022 when markets really took it on the chin and volatility remained persistent throughout the year. As I mentioned, thus far the best analog feels like 2018, which was, for what it's worth, in the middle of the first Trump administration. Markets had ripped higher into the end of 2017, and we had periods where volatility flared, where trade wars and tariffs were making headlines. And I believe this year is reminiscent of that so far. And my hope is the case plays out that it's not, that it doesn't turn into something more like 2022.
Well, I'm sure we'll be keeping you busy, Kevin. That's for sure. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.